Um, so once again, hello everybody and welcome to today's special event. I'm Terry Ryder, founder of hotspotting.com.au, and today we're focusing on non-residential types of property investment. The rather strange circumstances of 2020 have provided a stern test for various categories of investment, and my feeling is that if a property can not only survive but thrive in the kinds of scenarios that 2020 has presented, then it's likely to be a safe and highly performing investment at any time in the future. So today we're going to examine commercial investments that have passed the 2020 test, and there's nobody better to lead that discussion than our special guest presenter today, James Dawson from the Commercial Investing Academy. James has 4 decades of experience with investing in high cash flow commercial property investments, including teaching others how to do it successfully. So today is your opportunity to not only to listen to one of Australia's leading experts in this field, but to have your questions answered. So if you have any questions, please type them into the chat box or the Q&A panel, and we'll do our best to answer them either throughout the broadcast or most likely towards the end of it. So James Dawson from the Commercial Investing Academy, welcome.
Thanks, Terry. Thanks for the fantastic introduction. And as you say, it's certainly been a very, very interesting year. And, I've been in this game for, 40 plus years, 63 now, and been going since I was sort of 18, 19. And I've certainly never seen anything like this. So it's been, as I mentioned before, sort of in part, quite stressful at the beginning of the year, but certainly it seems to be a lot of positive stuff going on, and certainly a huge amount of activity in the commercial space that I'm in, and also that I see in the residential space, which they do go hand in hand. Yeah. So today I'd like to basically run through lots of different investments in commercial, particularly or mostly, that have survived or even thrived through this time. So, and it's often not the type of properties that you would think that would have been done well. So they're not all essential service type properties, which is, I know the media is sort of banging on a little bit about, if you're going to buy something commercial, buy an essential service property and, a medical center or something like that. But there's a lot of tenancies and businesses that have really thrived throughout this time. So we'll get stuck into it. Yeah. And my background, as you mentioned, Terry, is basically I've been a residential and then became a commercial property investor, and I've been doing that for over 40 years now. And essentially most people, I guess, start in residential like I did, and then probably most people that are on this webinar today, I guess, would have a residential portfolio or at least part residential, and are either looking to get more into commercial for the high cash flow and potential growth, or just interested in becoming investors that are going to start out primarily just in commercial from the get-go. So, I've always been focused on positive cash flow properties. I've never been a proponent of negative gearing throughout my whole investment career, which was a little bit counter to what most people used to sort of tell me all the time. But it has worked for me, and certainly now with the very, very low, continuing low interest rates, it certainly, can be a very, very promising thing for someone's portfolio. So essentially now I think, this time that we're in now, October 2020, we've had 7 months of this strange year where, which things have been turned upside down a little bit. It's been worrying, for most of us on and off, but we've now had this time to sort of look back and to see what's worked. So if you're an investor, now's the time really to start refocusing and moving forward, because the fundamentals of Australia property market, I feel, are really good. Obviously, Australia on the world stage has done very, very well throughout this period. So, that's, I know, particularly in Byron here, it's bringing a huge amount of foreign investors in. So that's probably going to continue. But, certainly if you're an investor now, we've got these continuing low rates. So it's a great time to refocus and focus on properties that tenants, with tenants in them that have survived or even thrived through the last 7 months. And also, if you've got tenants in properties that you're still leasing, of course, work with those tenants. So we can chat about that. And I know people will probably have some questions about that. But I would recommend that if you're looking to invest, don't sit on your hands, get stuck into it, get some knowledge together and start looking around, because it could be, I reckon, one of the best times in the last 20 years to buy property. Now, I'm going to show you some various examples today. Some will be just set and forget investments, and others with manufactured growth potential.
James, could I just briefly interrupt? There's a question there from Mike. He's just asking, will it be recorded? Because he might have to dash out soon. Something's come up. Yes, to everybody watching and listening, we are recording the event, and we do send a copy of the presentation to everyone who registers, including those watching live and those who weren't able to tune in live. So not a problem if you get interrupted and need to leave the broadcast partway through.
Yeah, that's great. Thanks, Terry, because I know I tend to talk a bit quickly too, so maybe they can slow me down on the playback. That'd be good. So just focusing back on the investments, I really just suggest to everyone that's looking at commercial property, most of the ones you'll be looking at are going to be positive cash flow given these low rates. So certainly they're the ones to focus on moving forward. So, we've had just this incredible time really that, since March, we've had, this sort of 7 months where we've been able to sort of develop this market intelligence as to what works. And, obviously some sectors are having a tough time, but it's simply now's not the time to just sort of sit around and wait. I think any investors, I can remember actually when in the early 90s when things were pretty crook and I was starting to buy stuff down in Sydney. And that certainly was a time when the sentiment was don't buy anything, sit on your hands and wait. But, I made really good deals at that time. And some of those deals have certainly, kept me going right through to now, which is, sort of 20 something years later. So you really just need to refocus on the correct deals to move forward. So you just don't want to focus on anything negative, but I will touch just on, the types of tenants that obviously are having some issues. So obviously, there's, this is like the elephant in the room, I guess. Some retail are obviously having issues, but not all retail. Now, obviously, if you go to, a big mall in Melbourne and a lot of retail shops, perhaps like David Jones, etc., I know it's just reopened. All those stores were shut or have been shut briefly at some stage during the last 7 months. Some offices, especially in the CBD and large buildings, have had issues, but not all. And I've got a graph that was released today about that occupancy rate in those office buildings, and also some restaurants and cafes. But look, this is not across the board. Many of these businesses have been able to pivot to keep open. And this is actually a very essential piece of commercial investing, that when someone leases your property, they've got, a lot of skin in the game. They're making their livelihood from that business. If it's a cafe, for example, that's in your property. So obviously throughout this time in the last, 6 or 7 months, landlords have been able to reduce rents. Businesses have been able to pivot. So I know I've got a couple of cafes. They've been able to continue on and continue trading. And me as a landlord, I definitely want them in there at the end of all this. And they definitely want to stay there because they've got a business. Now, also some CBD offices, they've still got a percentage and quite a large percentage of staff working from both from home and in the office. So maybe that's 50-50. And maybe that's going to adjust in the future. But I know that suburban offices and smaller street level offices are becoming very, very popular for some people. So there's been a lot of leasing going on. And retail, okay, the large malls could be perhaps have been tricky in the last 6 or 7 months, but the suburban convenience centres and places in regional areas have actually become stronger, and there's been a big uptick in leasing inquiry for a lot of those. So that's sort of like the neighbourhood shopping centres, those sort of things. And the fact is, with commercial property, if you buy it correctly, that some landlords actually are still okay on their cash flow, even if they were on half rent for a period of time. So that's just very important to note. And that just comes back to the basics of buying something that's positive cash flow. But just to give you a couple of little examples here, I was in Brisbane the other day, and this was in Tenerife, and I was getting my car serviced, and I was wandering around, and it was just amazing just getting out in the street. Now, there were some larger restaurants that were still shut up there, but the smaller restaurants, the fast food outlets, the cafes, they were all cranking. They were all going really well, and they were quite busy. And I had a coffee in one of them, and the guy said, "Look, we've been doing okay. It's been a bit up and down, but we're surviving, and we're going to come out the other end." And then conversely, on Saturday, I was in Grafton, and I haven't been in Grafton for 20 years. I usually drive straight past them and going down the coast. But I went down the main street. There was probably 4 or 5 vacant shops in this main street, and there's probably 100 plus shops in that main street. It was extremely busy. And also in the major mall there in Grafton, it was very, very busy, and basically everything was open and trading. So, yeah, just coming back to that, idea, if you're looking around for an investment and you were looking down this main street of Grafton, it's a pretty safe bet that if these people have survived up to now, they're going to continue to survive. And in fact, some of them have thrived.
Yeah. I think it's very true, James, that around Australia there are lots of thriving economies, local economies, many of them in the regions, but the smaller capital cities, places that have been relatively unaffected by the pandemic or not affected at all. Or in the case of the cities, places that got it under control quickly and firmly and kept it under control. It's almost, you could say, business as usual. It has been for a number of months. So I think the problem is that all of our major media comes out of the 2 biggest cities, Sydney and Melbourne, and tend to extrapolate what's happening there to the whole of Australia and declare it a national situation. The reality is that there's a very different world out there beyond those two big cities, and Grafton, you were presented as an example of it. There's many others that I'm personally aware of.
Yeah, that's right. I mean, even the small towns, say like Yamba, that I visit a little bit, and of course Byron, where I am, it's just absolutely flat out. It's sort of like Christmas holidays here permanently at the moment. But it was a little bit quiet for a while, but it's sort of all come back. Now, actually, I mean, you bring up that point in the papers, sort of say, actually, a lot of them say, look, everyone's trying to move to the regional areas, but that might be a lot said in the media, but I sort of reckon that that's going to balance out. I mean, not everyone can move out of the city and suddenly say they're going to move to the Sunshine Coast or Byron Bay or something like that. So, there may be, an uptick in demand. Well, I know there certainly is in Byron for people to buy rural properties and beach properties and all that, but it's not everyone, So I think that the cities will be okay.
Yep. They will adapt to that situation, and it could be that maybe some CBD offices, the tall buildings, that most of the people we're talking today aren't in that league anyway. That we're talking about small conversion, but suburban offices, because I know personally instances of people who have adjusted to the new situation and moved from CBD to commercial premises in the suburban environment, and so there may be uplift in those particular markets in our cities.
Yeah, that's right. Actually, it's one of my favourite little types of commercial investment. Is something with a shop on the street level and maybe an office or an apartment above, and there's probably going to be quite good demand for those. But this little graph I got from the Fin Review came from the Property Council of Australia. Don't want to bore you with sort of facts and figures, but it's just interesting was the CBD office occupancy compared to when all the drama hit. So it's sort of not as down as much as you would think. I mean, obviously you got Melbourne and Sydney have been, probably the worst there. But then you move through and, you're sort of coming up to Darwin and Hobart, which are maybe down 20, 25%. But the other interesting thing I saw here, that the reasons behind the change in occupancy is pretty much all to do with what was happening. So it was, due to the lockdowns, due to, public transport capacity being reduced, or perhaps some, safety concerns of travelling on trains, etc., and otherwise staff unwilling to return, to the workplace. But just people I talk to, so they're pretty keen. Not everyone's keen to continue working from home. I think that's a bit of a furphy, that one, that everyone just loves working from home. And it might have been exciting for 6 weeks, and businesses, I think, really do need, a lot of them do need to have offices, but there maybe this is going to be this balance out. But as you say, Terry, most of the people listening to this today probably aren't going to buy a major office building. We're more focused on the smaller commercial investors. So it's just an interesting little graph there. But actually yesterday, Burgess Rawson had one of their portfolio auctions, and the market actually is quite, I would say, hot. I mean, they sold 90% at the auction yesterday. And just to give you, I mean, they sold $33 million worth of property. I don't want to frighten people off with this, because there's still plenty of deals out there. Sometimes I say these things, say, look, the market's hot, or, everything's selling at auction. People sort of then go back to sitting on their hands because they think, oh, wow, there's just going to be nothing for me. Well, that's just not true. There's plenty of deals out there when you figure out how to look for them and find them. But
so is this a single auction day, 140 properties sold? Is that what that graphic's telling me?
Yeah, it's just it's 140 results. So that seems a lot, actually. I mean, they sold $33 million worth of properties. So maybe there was that seems a huge auction day, doesn't it, Terry? Maybe, I'll have to check on that, actually. This is just a little snippet of what some of the ones that they sold. And look, childcare, a retail complex in Koana, and, a pet store, all these properties have all been just trading right through. I'll find out about that. That just seems, I mean, that auction would be going for hours if they're selling 140 of them, I would say. But, and you look at the yields here too, actually, and look, there's nothing better than probably a yield of a property that's sold at auction to give you, a realistic sale price, I guess, in a public environment. So anything from 5.6 to 6.9%. Now, current lending rates for commercial, are anywhere from about 2.5%, up to maybe 4%. So obviously, if you buy a property that's returning 6.9 or 7, you're going to be very, very positive cash flow. So it's great that level of financing is there, and also the yields are still there as well. Now, one thing I did also just mention before, and I found this in Brisbane, I've got a couple of pics that I took the other day, that the amount of leasing activity that's going on is really great. I mean, there's just lots of stuff getting leased, and I'm not quite sure why there's a lot of activity now. Maybe people just moving around, but there was, I get sent these emails, and I've got a property in Bondi, so I was just interested in that. But there's lots, and my agent down there says lots of people moving around. If a property, and this is getting back to the basics of commercial investing, if you buy in the right location, and it doesn't have to be CBD or Bondi in Sydney, but if you buy in the right location in a regional area or a small country town even, you're always going to get, at least if you bought the property correctly in the first place. I noticed around Brisbane, this was in Tenerife area, lots of these smaller buildings had leased signs on them. So not sure what tenants are going into these, but it was just, I guess, comforting to see that this was going on. Here's another one. These would be great little investments too, these style of properties, car parking and maybe 2 or 3 tenants in this property. So, it's all quite good news. And then yesterday too, I got an email about the sales. This is quite interesting, actually. The sales, this is just on the Gold Coast, and the 3 months to March 2020, they sold basically $50 million worth of commercial property. But the 3 months to June 2020, $136 million worth of commercial property. So yeah, it's just interesting that there's been quite an uptick in sales, and it's certainly not the market that a lot of people think it is. Where people think that people aren't doing anything. So there's a lot of activity out there, but once again, I don't want to frighten anyone off. There's always deals around because so go on, Terry.
I would have thought it would be the opposite of scaring people. It'd be giving people reassurance and encouragement that,
well, that's true. Yeah.
The thing is, throughout this crazy period, there have been so many outcomes out of different forms of real estate with those kinds of what I think are spectacular results. And I sometimes wonder, is it simply, in some cases at least, the reality that in uncertain times people are seeking certainty and comfort, and bricks and mortar, the old cliche that it's so solid and dependable, and people are retreating to that in these times. Do you think that's a factor?
Oh, absolutely. I mean, look, I'm not much of a share investor, and I think the share market obviously can be volatile, and it seems to be going really well now. But I just, people that I talk to, maybe they're doing that, Terry. They're thinking, how long is that going to go for? I may as well get back into property. And let's face it, you're not getting anything on your money in the bank. So that's another big factor, which is going to continue on, I guess. So yeah, so there's just a lot of positive stuff out there.
It's interesting that in the figures you've got on the screen, these are from the Gold Coast, that such a big percentage of it is various forms of retail.
Yeah, that's right.
That impression that sector that we're told in media is struggling so much in these times, but of course.
Yeah, that's it. I mean, there's the same talk that you get people saying, well, look, there's been a huge boom in online sales, which, there has. I mean, I buy a lot of stuff online, but people still go to Super Cheap Auto. They still go to Bunnings, they still go to these stores. And even if they're looking at stuff online, people just want to get in the car and go somewhere, and buy things.
Well, that's right. That's right. I mean, Melbourne, I think, coming out of lockdown, is just going to have this avalanche of people getting out and doing things, spending, going to cafes and restaurants. But I think there's another lesson in all this that I think is really important. Media is always full of, forecasts and prognostications, usually from economists. And for me, they're people who sit in their offices looking at graphs on screen and talk about generalizations about what's happening in the economy. And they constantly misrepresent the reality at the street level. And it's far more educational for people interested in investment, wanting to do research, to talk to people at the coalface. The anecdotal evidence of people are actually out there at street level doing stuff is usually a lot more informative and a lot more accurate than what we get in the media from economists who never step outside of their ivory tower offices. And I think it's a huge problem, and I think people need to take that on board.
Yeah, absolutely. I think I look, and I always suggest that, even just that basic level when you're starting to have a poke around. I mean, we can all sit online and look at, hundreds of properties a day, but unless you actually get in the car and say, right, I'm going to drive to Grafton and get out and walk around, you just can't get the same feel. So it's super important. Just sort of run through some tenants that are obviously less at risk, and I'll show some examples of these. Of course, you've got medical tenants, dentists and doctors, medical centres, blood test centres, all that have been obviously very stable. And retail and suburban locations and small centres. I know with my own centre, we had a couple of vacant shops, and we've had a huge uptick in inquiry, and we have two convenience / supermarkets now vying for a space. Suburban offices, industrial. Actually, when I was chatting to you before, Terry, I know that one of the big agents said, look, industrial is the way to go. And look, it's definitely, it definitely can be a great way to go, but it's not the only commercial investment. But I know that some of the media has been saying, oh, buy industrial. But there's many different types of properties to get into. And quite often it's when an investor's looking, It's about what sort of affinity they have with property. Some people love industrial. Other people, I don't actually have any industrial property, but other people sort of more focused on retail and maybe small offices. So it's just one of those things to figure out which style of property you like without being emotionally involved in it. Restaurants and cafes. I mean, I would see nothing wrong with buying a property with a cafe tenant if they were trading now and it was a good location, particularly in suburban and tourist locations. So they're the ones to refocus on, but obviously you need to do your basic due diligence and focus on the tenants initially to see how they've been going.
So James, can I just clarify a point, how you would classify or what your definition of industrial is? Now, there's a lot of out there in the suburbs, little projects with little units where people might have a little warehouse and an office space beside it or a workshop. Do you call that industrial or do you call that something else?
Yeah, look, and the thing is that actually there's all this sort of crossover industrial. So if you went out to the Byron industrial estate, and there's probably like many in sort of small towns, some of them have got cafes and things like that. So they're not just the classic, panel beaters. They might have, an art store, a clothing store, even a brewery. You see all these micro breweries everywhere. So they are still industrial, but they're almost a bit of a crossover sort of retail showroom / office. Lots of those in Brisbane, actually, you see they'll have, nice office upstairs and then they'll have, a bit of storage and stuff downstairs if they're shipping stuff out. So it's, I guess when most people hear industrial, they think panel beaters or, car repair shop.
Yeah.
Which actually brings me to my next slide because I went out to Lismore, oh no, this is months ago now, but, probably 3 months ago, and I wanted to get a new trail mild ute that I've had forever. And I was chatting to them out there at Triple T Trailers in Lismore, and I said, "Oh, hey, how have you been going through this last few months?" And they said, they just had never been busier. They were absolutely overrun with business and couldn't keep up. I mean, I had to wait, 3 or 4 weeks to get the tray put on the ute. So, that business doing extremely well, but would you consider that as an essential business? I wouldn't. I mean, it's a, trailer and tray place, So there's lots of investments that, aren't considered, essential. And, they certainly could be a great investment. I mean, I'd love to own that building that those guys are in. They've been there for a long time.
You can imagine that a business like that would be servicing one of the phenomena we've seen through this period, where there's been a lot of people doing renovations. They're either in lockdown or they're restricted. They can't do what they can't take an overseas holiday, or they can't go interstate even. So that there's a lot of people have used that time to do stuff at home, and a business like that would be, to a certain extent, be servicing. There's some figures out this week, James, which showed there's been a massive uplift in alterations and additions going on in 2020.
Yeah, that's right. I mean, even, you've only got to look at, say, Mitre 10 and, Harvey Norman. I mean, Jerry Harvey's, sort of got anything to do with homewares, Bunnings, all that, the Good Guys, everything's going well. I know myself. I mean, we couldn't travel this year, so we concentrated on stuff here and, doing all sorts of repair jobs. I mean, I love Bunnings. If they had accommodation, I'd probably stay there overnight.
I know it's even for a non-handy person like myself, it's an enormous trap. I try never to walk in there because I know I'll make all sorts of unscheduled purchases if I do.
Yeah, I have to go in there on my own, otherwise I just annoy everyone. I have to stay there too long. But yeah, so I think that's a big point. So obviously when you're poking around looking for places, it actually it is sort of like buying a new Toyota or something, and then you start driving around and seeing all that model car. Once you open your eyes to these sorts of things, you think, well, wow, that business is really busy. That's not something that's, it's not a medical center, but that's busy. That's a great point. It's just sort of, reinvigorating your outlook on things to focus on these ones that you would be safe.
Yeah. James, I get the feeling listening to you talking that for you, research isn't so much looking at data on a screen. It's driving around, looking at places as much as you can and just getting a feel for what's going on. And as I mentioned earlier, my feeling is that kind of street level information and talking to people who are in business is sometimes a lot more valuable than what the graphs on the screen that media presents.
Oh, absolutely. But look, I do like to say, for example, all your research that you do, which is great, the reports and everything, because, say I'm looking on the Sunshine Coast, to me, what I probably do it the other way around. I do it like that. I sort of get out in the street, have a look around, look at some properties, talk to the agents, talk to the tenants if possible. And then I would, go back and look at your reports, even though, I know it's residentially based, but it's all the information, that I need to sort of back up the decision, So, but yeah, I really think now hopefully the borders are opening, people will be able to travel around a bit more and actually go and look at things.
But Nicola's, who's watching and listening, is suggesting a business opportunity, James. She's Airbnb Bunnings for boys' weekends. What do you think?
It could be good. They'd have to do a vegan sausage or vegetarian sausage. But yeah, I don't know. Actually, a lot of people tell that to me. They say, "Oh, we'd like to stay there or stay nearby," but could be good. But just running, through some of the positives, I guess, that have come out of this period. And I remember talking to a mate, ages. It was probably last year, and we were talking about when the poo hits the fan sort of thing, that situation. And he sort of said to me, "Oh, what do you think?" And this is before any of this happened. And I said, "Oh, look, if something really, really bad happened, I would think that the government, particularly in Australia, would come in and intervene, and they certainly did. They came in a big way and probably surprised all of us with, the cash that was going around that, has obviously made a difference. But not only that, we've got these low interest rates, which are, dropping again probably. But the biggest thing is, and one of the biggest things is that we've now, as investors, we've had this sort of unprecedented time to learn what's worked and what is safe. And if something happened again, we've learned from this period, the last 7 months. And, backing up that too, of course, our fundamentals in Australia are strong. I just know in Byron, it's quite an international town, and the money that's flowing in here. I mean, one guy I know who's coming from Hong Kong next year spent $30 million here in 3 weeks. They see this Australia generally to be very, very safe and where they want to be. So
the fact that our borders are closed, James, and people with overseas migrants can't come in, but there's plenty of investment coming from offshore. A lot of it's coming from expats who are in places that, Australia has been held up in the world as a model of safety because, notwithstanding what's happened in Melbourne recently, overall, Australia's been one of the best case scenarios for getting it under control quickly and being a safe haven. A lot of the expats want to come back and from wherever they might be in Europe or Asia. And I think that's a factor that driving up. The Gold Coast, despite its reliance on international tourism, is actually, its property market, residentially at least, is doing very well. You would logically expect it to suffer, but it's not. It's producing some amazing sales, and a lot of it's coming from expats wanting to invest back in Australia and come back.
Yeah, and I'm not. That's right, Terry. And I'm not sure of the full sort of rules, but I mean, depending on how much money they invest, they can get their residency, can't they? I think so. That's another thing. But of course, we've also got the solid healthcare system. But and actually, this sort of thing is happening internationally as well. I look at what's selling in America. I follow that market a bit, and even though all the stuff that's going on there, I don't even want to go there. But the property that's selling there is very similar to what's happening here. So it's sort of following the same, and even in some areas of Greece, for example, stuff's still going on. So,
I'd also like to comment on one of the points you make about government intervention. I think that's a huge factor. I see, the beginnings of a property boom in Australia. And I think one of the things that's going to take what's pretty strong in many parts of Australia to boom levels around the whole country is the intention of federal and state governments to have an infrastructure-led economic recovery. And it's very clear that's the intention. We've seen it in the federal budget. We've seen it from what we're hearing from various state and territory governments. They're going to bring forward everything they can, fast track big infrastructure projects. And in my view, nothing supercharges property markets more than that. I mean, just think of what, the building of a $5 billion piece of infrastructure, be it a rail link or highway, what that generates for local businesses and jobs and demand for real estate. And I think it's going to be a huge factor to, I think Australia's just going to come surging out of this economically and in terms of property, very, very strong.
Yeah, that's right. And the other thing too, Terry, someone mentioned to me the other day, the amount of money that Australians spend on travel every year, I forgot what it was billions. Maybe it was 50, 60 billion. So even if next year we're not traveling, people are going to spend that here, so they're spending it on something. But, with all investments, the aim really is to get, pretty much bulletproof rental income from your properties. That's the goal, really. So, and I think that's, absolutely achievable from this style of investing. But look, one of the most basic positives really with commercial property is that you can get genuine positive cash flow so that you can build a buffer, so that if there is a drama and you're sensible and put that buffer aside or pay down the loan, there's a number of obvious strategies there you can do that, you're going to put yourself in a great position moving forward, with your investment if something does happen. And I just thought I'd run through, I'm not going to, in this webinar, I'm not really focusing too much on all numbers, but I just sort of use my own gym tenant as an example here. That gymnasium that I've got, which is actually in a centre, probably worth around 1.4 million. But if you used equity to get into that property and borrowed pretty much all of the cost of that property to get into, and the net rent on that property is about $100,000 a year, the repayments are around 27 plus 15 if you were using 2 loans. It's actually about $58,000 cash flow positive. And some of the examples I'll show here a little bit later, they're very, very achievable properties and quite easy to find. So obviously, if you were putting that positive cash flow aside rather than spending it on lifestyle, that would give you a very nice buffer within a year or so, that if something happened to that tenant and and actually I gave this tenant, I think, a couple of months rent free when things changed about in March, and they were very thankful for that. And now they're back to 100%. That, easily enabled me to look after them and keep them in the property. And that's the main thing. You want them coming out the other end with a great business and me with a great tenant. So just summing up, I guess, those positives that, this level of market intelligence that we've got, it could really be one of the best times in the last 20 years or so to buy. In fact, I was sort of thinking the other day, it's almost like when I launched into Sydney a little bit in my own small way with small investments in the 90s, that it was a very negative time for a lot of people, but it certainly was a great time to invest. And if you've got tenants that have been proven in the last 7 months, that's certainly a great indication of how they might move forward. Not only that, the record low interest rates, I reckon you're right, Terry. We're probably in for a little bit of a boom, because they're probably going to have a bigger impact, positive impact on commercial property compared to any negative sentiment caused by what's happened this year, because people just aren't getting any money return on their money in the bank. So investors are just looking for return all the time. If you're a serious investor, you want return on your money, you're taking on the risk of investing, but you're getting paid for that risk. That's the whole basis of it. So it's certainly, I certainly think it's the way to go. And, like any property investment, why invest in commercial? It's pretty much the same for any property investment, I guess. But you can leverage that investment quite easily. Banks are lending, up to 80% for properties under $1 million. You can obviously buy quite high positive cash flow properties, and if you choose correctly, you're going to get the growth and stability, and not only that, you fantastic tax benefits and a tangible physical investment. So I often think in these sort of times that people want to get back into that sort of tangible investment where they can control it themselves. It's not part of a fund or something like that. And, it's less volatile in shares perhaps. So a lot of people are much more comfortable with a fixed sort of property investment that they control.
I was just asking a question. You just touched on interest rates, and he's asking what your thoughts are on interest rates. He said they're currently low, but what happens in 5 years if they're 5 or 6%?
Yep, very good. Look, that's a fantastic question and a very good point. So that is probably the biggest basis for the reason of buying something that's positive cash flow. So you can imagine, just say using that gymnasium example, I can just go back to that slide. If you had a property that was, say 50,000 a year positive cash flow, and you're currently paying, say, around 3% interest on your loan, and you were, considering or working out a strategy if interest rates went up, obviously one of your strategies could be to build up a big cash buffer or pay down that loan by using that cash buffer. Of course, you've got your other strategies of locking your loan in or locking half your loan in. I can remember when the interest rates were 4.5% a year or so ago, and everyone was saying we'll lock our loans in, but it's kept going down. I mean, how much lower can it go? Who knows? So, I know a lot of people that will lock in 50% of their loan probably shortly. So there's lots of strategies there, but I would say if there's an increase in interest rates, it's going to be quite a slow process, and you will have plenty of warning. So it's not going to jump up overnight, and it's certainly probably not going to jump up over 3 months.
The Reserve Bank's indicating that we're not likely to see any upward movement for maybe 3 years, and if there are movements after that, it will be gradual. They're not going to go to 6% in a hurry, that's for sure.
No, and look, it is a great question, but I think it's something as an investor, you've got to keep an eye on these things. If you're controlling your investments, and you get wind that it might be going up or it moves 1 point or something, obviously you do your homework, talk to your broker, and consider locking part of that loan in, and maybe locking it for 4 or 5 years. But it's way better than buying a property that's cash flow neutral. That's for sure. If you can have some positive cash flow and then pay down that loan. But good to look at some examples here, Terry, of some recent deals. Now, some of these could be the essential service, but others aren't so obvious. And some of these are sort of more set and forget deals. Because I know a lot of people that are watching this are probably investors that just want to buy something and just collect the rent. And there's probably nothing easier than doing that. But there's also lots of properties you can get with commercial where you can manufacture quite a lot of growth. So I'm not going to run through all the numbers of these, but these are just all recent sales. And just this one, for example, with a 70%, 30% deposit put on this deal, this one was over 1,300 per week positive. So with about 94,000 income, and the repayments are about 35 grand. So, a vet clinic has gone well right through. In fact, there's been an uptick in people buying pets, I think, in the last 6 months. So that's probably a great tenant, and potentially some upside in that with the area of land and owning the whole block of land, perhaps redevelopment in the future. So that could be quite a good one. Here's a classic, very boring looking small industrial, a couple of warehouses, and actually the tenants for this, one of them is a cleaning restoration place that actually does, full sort of, I wouldn't say forensic cleans, but, cleaning to, to a high level, and also a boiler company that does, factory hot water services, etc. So these businesses have just been trading on and can be a fantastic, easy care, no maintenance. Obviously, the tenant pays a lot of the maintenance, but if you're in a body corporate, there's just nothing to do, nothing to spend money on. 7.3% return on that one, so great set and forget. Another one here, which probably has what I would say would be upside as well, because you own the whole block of land, 3 professional medical tenants, so you're a tax agent and I think a dentist and something else there. 1.72 million, 7.56% net. So great property. Great to own these things when you can own the whole block of land. I mean, there's nothing wrong with a strata investment, owning a part of a property, but as you're moving up through your scale of investments and perhaps, increasing the size of your portfolio, these can be really great ones to own where you have the whole block of land. Last one was in Brisbane actually. And you see a lot of these style investments around. Look at this, only, $400,000, probably cheaper than most home units. And I'm pretty strong actually on the sort of, Southeast Queensland, Brisbane, Sunshine Coast area. My only, I guess, slight warning with some of these developments is when you go to Google Earth, particularly starting to look at some of these industrial, you'll see a lot of land around them that could be instantly developed into more industrial. So you sort of want to make sure you've got quite a good lease and good tenant in place, because you might have some competition in the future, but that's not always the case. And something like this, ANZ are offering currently, I think, about 2.5% interest for 3 years fixed, and then rolling on to a 30-year term, and they'll lend 80% on stuff that's under $1 million. So quite easy to get into if you've got, say, around 100,000 cash or equity. Could be a great little deal for someone starting out. Actually, probably easier to get into than a residential one. Another one here, this company's been going for a long time. Tenant's been there 10 years. Off-market deal was about 1.3 million, and huge land area. They've actually got 1,500 square meters of space. And one of the things actually I look for, particularly with these larger floor space buildings, is, how adaptable is that if something happened to that tenant in the future. So, this could potentially be divided up into 6 or 7 spaces in the future, and might be a tremendous upside. I mean, I would be, hoping that they would just stay there and pay the rent. But, if something does happen, it's a great thing to have up your sleeve for the future. Next one, just a classic. And these fast food places are actually probably almost the perfect design for any sort of drama like we've had, particularly with the drive-through. And whenever there seems to be any sort of thing going on, they always seem to get busier. So they're a great thing. And often these KFCs and other fast food outlets like this are on very, very long leases. So not that I eat Kentucky Fried, I have done, but they can be a great investment, and they're generally in very, very, very well researched locations, which obviously is pretty important.
Yeah. And they do tend to have wonderful location. I think it's the central part of the whole deal. Anyone who saw the movie about the guy who basically took McDonald's into a global phenomenon, his business took off when he realized he wasn't in the hamburger business, he was in the real estate business, and it was all about securing the real estate.
That's right.
Best real estate.
Yeah, that's right. No, that's a really great story, that one. And actually, as an investor, if you're poking around and just driving around and you start to see, McDonald's and Kentucky Fried Chicken, and then there's a small shopping centre next to it that's for sale, you virtually can't go wrong. It's sort of like Aldi as well. When you realise or find out the level of research that they do and the amount of money that they spend on researching locations, all you got to do is follow them. It's like me sort of following the best surfer out there this morning. I just figure out where Steve Mills, the best surfer in Byron, goes, and then I just follow him. So these, Mitre 10 garden centres, as we mentioned, great if you can get onto one of those. These can be great, and often really good redevelopment sites in the future, because they sometimes have quite a bit of land that could be redeveloped. But essentially, one thing I've sort of noticed is that, for years people have sort of justified getting pretty low yields, and I'm not quite sure why, but, it's sort of what's been sold to them a lot with residential properties, that they think, oh, well, I'll just accept that I'm only getting 2% net on my residential property because I, think there's going to be, some growth at the end, or that's what whoever sold to me told me. And, that could be a little bit harder to find now, perhaps. But, so what do I reckon? I reckon that, you buy something cash flow positive so you can actually take your profit as monthly income rather than waiting for, 5 or 10 years to get a higher valuation. And it's not to say that doesn't happen, but if you buy deals with solid tenants and good positive cash flow, at least you can bank some money now and you have control of that to decide what to do with that depending on your strategy. Here's another great little property. Terry, just a first aid equipment manufacturer. That one is probably an essential service type tenant. All these ones, tenant pays all the outgoings, just a net income that you could just bank. You might even want to manage that yourself. It would be very, very easy. We're going to move on to some properties shortly that have upsides as well. So we'll just flick through these quite quickly. This one I popped in because it's a martial arts personal training gymnasium, and I've got 2 gym tenants actually in my portfolio, and they, initially they did have to shut down for a little bit, but now they're all fully reopened and they're actually trading quite well. But these ones, on a very low price range, and also quite a low affordable rent for the businesses that are in there. Some of these might be paying 28, 30 grand a year rent, and it's quite affordable for them to run their business and therefore make their living out of that property. So this one, potentially, is going to have some growth because it's got 3% fixed rental increases, which is obviously over CPI at the moment. And actually, a few more properties that have just been sold. This one at Mooloolaba, nice little property down there, strata title. Not sure about the details of the sale, but just goes to show what's been going on there. There's lots of stuff been happening. Another great tenant. Look at these guys. They're Salvation Army, but leased to 25, but options to 2040. These can be, I would say probably quite boring properties really to own, but that's what you want. I mean, do you want to get excited? I just want to get excited about the seeing the rental statement, without any dramas. That's the main thing. Another one of my favorite shops, actually. These have done very well throughout this period, just people fixing things, buying stuff. And, these buildings, they're concrete tilt build. Quite often they're quite easy to adjust to other uses if need be. And very good low maintenance style property and easy to manage. And these sort of tenants too actually do a huge amount of research as to where they go. So can be a great investment. A lot of these actually are from Burgess Rawson. So you can have a look at their website and then actually check out all the ones that have sold and look at the returns that they've sold at, so you can actually do some homework on the numbers there, see how it might work for you. Childcare, I've got a childcare as well. That was a bit tricky for a minute, I would say, March, April, but then childcare is obviously a very, very important thing in Australia. And definitely ours has come back to 100% very quickly. And I know that most of them have, so they can be a great investment at various price ranges, anything from, 800,000 up to 10 million, probably in that style of investment. Great to see all the solar panels there, actually. So they might be getting a bit of help there from the sun. But the other thing that Terry, I find with a lot of people, they don't realise or believe that with commercial property you can get any capital growth at all. So you're just collecting positive cash flow, which in a way, sort of is sometimes better than capital growth. But they feel like, oh no, everyone's told me there's no capital growth in commercial property, so I'm just not going to go near it. I'll buy something else and I'll just hope and pray that it's going to go up. It's just simply not the case. It's just about getting educated and knowing what to look for, and looking for things that do have potentials for growth. And I've certainly done it where you can get maybe 5 or even 10 years growth in a couple of years if you know what you're looking for. And people just miss out on stuff. This is a bit of a classic example here. This just sold last week. This was on a shopping centre. It's the only shopping centre in Churros Head. Sold for $3.5 million. So relatively affordable, I guess, for the small to medium investor. 16 shops, 9% net return, and it's probably around 200,000 cash flow positive, 320,000 per annum. But I immediately, just by looking at the photos, see some potential areas for manufactured growth here, which could be, perhaps building some small offices on top, reconfiguring things. Maybe there could be a fast food outlet on the corner there. The zoning, it's another point about commercial property is that, obviously you've got a commercial zoning, so you can do a lot more with commercial property than you can do with residential. So, you might be able to put another coffee shop or something in that, but that was a great deal. I don't know why I didn't see that before, but that you can't buy everything. Another one here, and these properties too, can easily be strated up. I mean, whoever's bought that last one, I'll just flick back to that side. He's bought that at 9% net return. Now, a simple principle: if he strated that up into 16 shops and then sold them at a 7% net return to a new investor who would still probably be very happy with 7%, he's going to make a lot of money. I'm not going to work that out right now, but he's probably going to make a huge amount of cash just by doing that, what I call a paper development, just by strata titling that and then providing a smaller unit for a smaller investor to invest in, still at a very good return. So I guess he's bought it at a wholesale price and could resell it at a higher retail price. So all these styles of centres have done very well, and actually these would be a great tenant. IGA and liquor. IGA often have their own license availability to have a liquor store as well. So these can be great tenants that you can potentially get great upside. This could be a multi-tenanted shop, a shopping centre that you could strata up in the future. It could be an exit strategy rather than something just to buy in and get out quickly. But just a couple of upside points here. Strata, rental growth. Obviously, if you buy something that's, say, a little bit under rented or under market rent, you could increase the rent and therefore get an increase in value, and obviously just learning how to buy the property well in the first place or build more. One of the students in my course actually bought this property, North Queensland. I think it was 1.2 million. So you look at that, you think buying a small shopping centre like that for 1.2 million, it looks extremely cheap, and all rented. It's over 11% net return. Lots of upsides there, that he could engage. Nice, neat little centre. I mean, honestly, you probably only need to buy one of those in your life. I think that one's about 80,000 a year positive cash flow for him. So getting back to that chap's comment about, interest rates going up. Okay, well, if you're paying 80,000 a year off your loan for the next 5 years, for example, you're knocking a big proportion off that debt if you borrowed, almost all the money, for example. So you're putting yourself in a very safe position. So there's lots of strategies there. I find these properties all the time. This property here, I think this is up in the Sunshine Coast somewhere, and it's got approval at the back to build some townhouses. So a perfect thing. You're buying this part predominantly based on the rents of all these shops here, and then in the future you can perhaps build some townhouses. You might even want to build one to live in, and that's often the case. So they can be a great investment to have that, because you've got the cash flow coming in while you're waiting around to do something in the future. Another one here. You often see these two service stations with convenience stores. Obviously, everyone's putting petrol in the car. I don't. I've got electric cars, but I still go to the convenience centre. So a lot of land holding here. This could potentially have a Kentucky Fried Chicken or something on there. One that I've done in the last couple of years, one of my own properties. This property here, just a terrace house, just a cafe there, an apartment above that we used to Airbnb. And that cafe is actually still there, still trading. And we got approval for that. This 4-story block of apartments on the back. And just down the road, actually, another one that just got this approved. So a lot of people are doing this. They're buying an old building like this. I think this old building was $3 million with tenants. And then they're working through getting approval because of zoning changes, etc. to build upon. These all look over the beach, so they get a fantastic view. But, so that's something that, and maybe you wouldn't build it. I'm not going to build ours. We'll probably end up selling that on to a developer. So you get an uplift in price there while you're still collecting the rent. Another one here, just on the Sunshine Coast, little commercial property there, and ability to build. I've forgotten what it was. It was about 24 metres high. So look, there just in general, there's lots of opportunities for growth, but you really don't have. You can have that in the back of your mind when you're looking at properties, but you still have to focus on the numbers because you still want the property to positive cash flow. So I wouldn't recommend buying something just solely because it's got development potential and then also having negative cash flow from it. I wouldn't be interested in that at all. So rolling on, Terry, just running through those things that I like about commercial.
Okay, James, I just wanted to ask whether you're almost at the end of the actual slideshow, because we've got lots of questions. Lots of people have been putting in questions. And
yeah, well, do you want to? We could start running through some questions, Terry. That's absolutely fine, and I'll go through to the last couple of slides. Just the ones that this is quite important. That only 10% of the people are generally looking at commercial, so that's a good point for a lot of people. Let's roll into the questions, and I can just flick on to the last slide where people can get a bit more information. I know I've chatted on a lot.
So Colin's asking, in the current climate, what would be considered a good yield percent? That's the first part of his question.
Yeah, I think look, good question, and it varies for certain types of properties. I know that say in Sydney, in Bondi, people are accepting as low as 2.8 or 3% yield on properties. But to my mind, I would like currently to get at least double what the interest rate is for your loan. So if you're going to pay 2.5% on your loan, I would like you to get a property that's showing at least 5%. I personally, when I'm looking around, I sort of have the magic number of around 7 in my mind, but it just depends on the location, the type of property, the type of tenant, and the lease, etc. So I think just bear that in mind. Just relate it back to your loan interest rate initially.
Okay. Sandra's asking, what's the minimum deposit for a commercial property, and what sort of interest rates are applicable for commercial property loan? I know you touched on that. The interest rate earlier, but minimum deposit normally?
Yeah, generally speaking, you would need at least 25%, and that would cover your deposit for your loan and the buying costs. So, stamp duty, etc. Now, that's under $1 million. Properties over $1 million, you would probably want to allow 35% to cover the deposit on the loan and your acquisition cost, stamp duty, etc. So, plenty of loans around available that are under 3%, both under $1 million and over $1 million.
Greg was asking whether interest-only lending is good for growing a portfolio in commercial property.
I personally have used interest-only loans for the last 20 odd years. The benefit is that you get, obviously higher cash flow, higher level of cash that comes into your pocket, but then you can decide what to do with that extra cash flow. Whereas if you're paying a principal and interest loan, obviously the principal is paying down the loan, which is great. But if it's the same thing, if you're have an interest-only loan and banking some cash as a cash buffer, you can then decide whether you're going to pay down the loan or use it to fund your lifestyle. So it gives you that advantage of just deciding what you can do with the money rather than someone decide for you.
We've got a question about the opportunities in commercial in Sydney with a 6% plus yield. Any particular areas that have examples like that?
Look, this is a great question, and just bear in mind when you're looking at properties that some might be advertised as showing 4% yield based on what the agent's telling you and what the rent is, but with good negotiation techniques, certainly that I have been using for a while, you can, get that return up. You actually want to try and buy better than the average person is buying in that location, because that will give you an equity uplift in the short to medium term quite quickly. But look, Sydney's probably tough, I would say, to get something 6%, but not impossible. So certainly worthwhile looking, but don't just rely on what the agent's telling you.
Ali was just mentioning that dual income, dual key residential properties as presented as a good option. Is the equivalent in commercial property?
Oh, absolutely. I mean, you'll often find some of the, say, smaller industrial and smaller retail slash residential properties around. I actually love that style of property with the shop downstairs, apartment above. You can do Airbnb in the apartment, someone live in it permanently, or you could turn that into an office because you've perhaps got the zoning there. Small industrial, small and retail that might have 2 or 3 tenants, or it might be a larger space that you can divide up and get an uplift in overall rental income just by dividing the space up. So yeah, good strategy.
James, we have been going for about an hour and 10 minutes. We should start to wrap it up. There are more questions, but we just don't have time to deal with them all. I would urge people who are interested in what James has been talking about today to follow up and make contact. Perhaps have your personal questions answered that way.
Yes.
And consider taking part in James's commercial property course, which in fact, Cameron, who has been watching and listening today, says, James Dawson, absolute legend of an investor. I'm one of the students of his course. So,
thanks, Cameron.
Got a bit of a fan there, but I do know we've had lots of positive feedback from people on James's commercial property course. So certainly something to consider.
Yeah, that's right, Terry. Certainly just to learn the steps of how to find and analyse and negotiate properly is just so important. And, if I can just get that across to people, I'm a happier man. So. Okay,
well, we should wrap it up. People are on their lunch breaks, etc. So probably need to be getting back to doing some real work. But would the contact details on the screen if people would like to follow up and inquire about James's course or ask some further questions that we didn't get time to answer today. A reminder that to everybody that we will be sending all those who registered for the event a recording in the next couple of days. So thank you, James Dawson. As always, wonderfully informative, some great case studies, lots of good learnings from that. And I do urge people to interested in this type of property, firstly to make contact with James, but also to get out and about and have a look, do what James does, drive around, get a feel for what's happening in areas. And if you're thinking of being an investor, don't sit on the fence, take action. Now is a great time to be looking, I think. Thanks everyone for participating today, and thanks in particular to James Dawson for a wonderful and informative presentation.
Great, thanks Terry, thanks so much, and thanks everyone for tuning in, and look forward to chatting soon. Thank you.
Thanks everybody, bye for now.
Bye.